Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, April 1st. Happy Fool's Day to everyone. Be careful out there, but don't worry, I'm not going to put any April Fool's Day jokes on you today. We got a couple economic news releases to go over, and we will start with the manufacturing numbers with the market PMI for the month of March. So we had a 55.5 rating on the index for the month of February. And for the month of March, it came up at no change, 55.5. So basically, no change in purchasing manufacturing index overall for the manufacturing side of things on this number. And then on the other hand, we got the other manufacturing with ISM. And so we had a 53.2 back in February. Forecast was supposed to climb upwards to 53.9, and it climbed up to 53.7. So not quite as high as forecast, but it did show improvement. On both these manufacturing numbers, anything above 50 is regarded expansion. So albeit it's not huge expansion numbers, but it does still show some steady, slow growth in these areas here. We also got the construction spending for the month of February. So January we had a negative 0.2% in the spending, and it was supposed to be another negative contraction in spending in February, and it went upwards to 0.1%. So we'll kind of have to see where that lies. Maybe we'll see some construction picking up now that spring's moving forward. So if you're doing some travel plans, obviously be prepared for the roads and everything else, right? So let's go ahead and take a look at headline news. We got stock markets currently up, so good news right there. So part of it is the manufacturing numbers, is showing that there's a slight upwards movement in there on the ISM. They kind of like that number, but they also liked some news came out with cars. So people are the auto industry did pretty well so far. Earnings reports showing that people are out buying autos, so that was a good obviously sign for them. We'll jump over to see how this is playing out with the bond market, and as a result we're only up 3 basis points for the day, but if you look where we are on the charts, we actually started about 18 basis points lower than where we left off yesterday. We just left off just above the 10-day moving average, so now we're starting below it. We touched upwards and pulled back again, so we're currently about 16 basis points from where we left off yesterday, which would result in pricing to be for the worst. Now if this keeps going this route, it looks like we could be developing a trend downwards, which means rising interest rates on the horizon. So we need to kind of keep an eye on this. We've had a few, like yesterday, where it pulled back and closed upwards, but it did. Each day has been starting lower than where we left off, and looks like we could be on the way downwards again, which would be, as a result, higher interest rates. All right, so be cautious here. Again, we do got some volatility this week. We do got a lot of high impact data coming out this week, so it could go one way or the other. All right, but thanks for watching, folks. Hope you guys have a wonderful day, and we'll look forward to seeing you guys tomorrow. Take care.